Yesterday, we have seen a huge crash in the Indian stock market. But yes, if you compare with the global markets, Indian market fall is the lowest, right? We will even see what has been the numbers of the other global markets, to what extent they have fallen and what extent India has fallen. We will be looking into it. And yes, whenever there is weakness in the global market, or whenever there is some uncertainty in the global market, India, being a part of the bigger game, will also have a shadow effect, right? Will also have a shadow effect. So yes, in our today's discussion, let's see what are the major reasons for this market crash, and what has been impacting the Indian market, what are all the possibilities going forward, what should be our actionables also, we will be discussing in this session, right? We'll be discussing in this session. So without any further ado, let me share my screen and let's discuss about the market crash in India, which has been a shadow effect of the global market crash, right? Global market crash. And yesterday, if you see, the volatility index of India, which is the India VIX, has significantly increased, along with S&P 500 VIX as well, right? S&P 500 VIX as well. Now, first of all, let's look at what has been the major change in major indices of Indian stock market. Yes, if you look at Nifty 50 or even your mid cap index or the small cap index, the major dip we have observed is in mid cap and small cap, right? Yeah. So if you look at the screen in trading view, yes, Nifty 50, we have seen a correction of 2.68%. It has been a gap down yesterday. Similarly, if you look at Nifty small cap index, right? Yeah, Nifty small cap index. Yeah, small cap index is corrected by 4.57%, right? So we have seen major correction in small cap, and also your mid cap index, right? Mid cap index also similarly we have seen a 3.55, right? So broadly, mid cap and small cap has been the major effect, and Nifty by over 2.4% like that. And now when you look at India VIX, right? India VIX, which is the volatility index, right? We have seen a sharp increase yesterday. Almost intraday, it has even reached around 50% increase it has reached, and finally settled at 20 levels, right? As we have been earlier also discussing, when the India VIX is crossing 18 levels, right? When the India VIX is crossing 18 or even 20 levels, it's not a very conducive market for the short-term investments. We have to be a little bit more cautious, right? You have to be a little bit more cautious or careful, right? So this volatility is something not too good to enter for short-term investments, right? It's not a batting pitch, right? It's not a batting pitch. But yes, for the long-term companies, when we get some good opportunities to accumulate quality companies, yes, it's time, right? We'll be discussing about it, right? We'll be discussing about it. Now, let's discuss about what has been the major key factors which has resulted in this global turmoil in the market, right? First thing, yes, last week also when we have discussed in our inner circle call, right, for all our inner premium members, the data from US has not been very decent, right? The US job unemployment rate is at 4.3%, right? With this kind of an increase in the unemployment rate, it's not good for the overall market, right? Not good for the overall market. Second, markets are always forward looking, right? Markets are always forward looking, which means majority of the market, US markets, the other global markets, has already factored in that the Fed is going to cut the interest rate, right? with this kind of a data, right, unemployment rate at around 4.3%, right, the chances of the rate cut has come down low, right? Fed has already mentioned that they've given a cues from September onwards, they'll be having a rate cut. But with this kind of a news and the recent Fed discussion also has kept the rate cuts unchanged. So that has been a negative sentiment for the market, right? Negative sentiment for the market. Now, considering the Japanese issue also, right? It'll be very wise if Fed will go ahead with the interest rate cut. That will benefit majority of the sectors, and even Indian markets also will be a beneficiary of it, right? Indian markets also will be a beneficiary of it. So now Fed has to look at whether it need to focus on the growth wise, or it need to focus on the interest rate cut wise, right? It has to take a call on it. So as the Fed rates have also been kept unchanged in the last meeting, that has given a negative sentiment, right? That has given a negative sentiment for the overall market, right? Third, very, very important point. Yes, yen has appreciated against US dollar by over 10% in the last 3 weeks, right? In the last 3 weeks. Sir, how yen appreciating against US dollar by 10% will impact the market? Now we need to understand about yen carry trade, right? What exactly is yen carry trade? See, when global investors and traders, right, specifically in Japan, right, specifically in Japan, what they used to do, they used to borrow cheap yen from Japan to invest into higher return assets globally, right? Yeah, they used to borrow at a almost zero interest rate, right? The traders borrowed money in Japan at near zero interest rates and invested in markets, specifically more into US, right? The larger chunk of investments went into US. For almost 30 years, right? Japanese central bank, like your RBI in India, has maintained over, like, or even the majority of the banks has maintained over zero interest rates, even for the loans, right? Even for the loans. Now, what the Japanese central bank has taken a call is they have increased the interest rates from near 0% to 0.25%. They have increased the interest rate. So what happened to all these traders or investors in Japan who has taken loans in yen and converted into dollars and invested into higher risky asset classes? And majority of that borrowing, right, went into investments into USA. Now, as the interest rate has increased from a near 0% to 0.25%, all these traders who have invested with the borrowed money, they have to close their positions in US market because they have to pay interest also, right? They have to pay interest. So they have to close their positions. So by closing of their positions, that has also resulted in a negative sentiment, right? Negative sentiment and drawdown there, right? And that resulted in a negative sentiment. And even if you look at the uh, volatility index, like how we have seen India VIX increasing, right? The S&P 500 volatility index has increased by almost 100%, right? This is the first time where the S&P VIX has increased next to COVID levels. This is the first time it has increased to that kind of a level, right? That kind of a level. So these have been the major factors resulting in it. And now, if you look at the global markets, right? Global markets where you look from the all-time highs, right? From the all-time high, how exactly they have reacted, right? Japanese market, yes, they fell over 25% from the all-time high, and Hong Kong market fell by 15% from the all-time high, right? Australia by 6.3, Taiwan by 20, Korea by 16%, Singapore by 8%, and India, yes, fell by around 4%. And yes, Japanese market being the highest and Indian market being the lowest, right? So this also shows, right? This also shows that yes, Indian markets are more stable, right? And this is a resultant. Numbers speak. India has been one market which has had a shadow effect because of the global market fall, right? Because of the global market fall. And now, yes, if you look at FII selling, right? Foreign institutional investors. Yes, let's go back to moneycontrol.com, right? Yeah. Let's go back to moneycontrol.com. And you see, yesterday, yes, we have seen the FII and DII activity wise. Yesterday, we have seen a major sell off in the foreign institutional investors, right? Because of the panic created by the Japanese incident or even the US data wise, we have seen over 10,073 crores, right? We have seen an impact. And net in August, FIA's outflows were 11,294 crores. But the best fact or the wonderful fact is DAI, our domestic institutional investors, which are the mutual funds, right? The wealth management firms, all the domestic institutional investors have added over 9,155 crores, right? So if you see net, we are positive. The silver lining here is the damage has been recovered by DAI, right? Almost 11,294 crores dip and 11,784 crores has been the entry, right? Almost it has been nullified, right? Almost the damage has been nullified. So the FII major selling has been because of the panic of Japanese and the US markets related. But yes, on the DII wise, we have seen yesterday of a net buying of 9,155 crores. Now, sir, yes, what will be the way forward for the Indian markets, right? Please understand that in the recent couple of days, right, or even in the recent couple of weeks, right, we have seen a huge appreciation in the Indian stocks, right? Our indices also has moved wonderfully well for the last couple of weeks or even the last couple of months. So small healthy correction is required for the next bull run to start, right? For the next bull run to start. So we need not be bearish on the Indian market, considering that the latest GST data, if you see for the month of July 2024, right? Almost to the tune of it has been very healthy data, right? A 10% rise in the GST collections, right? We have seen a 10% rise in GST collections, almost like 1.82 lakh crores, right? Is the GST collection. And apart from that, we have been tracking the data from AMFI, right? Association for Mutual Funds of India. Right now, the fund managers, right? The fund managers are almost sitting at around 2 lakh crores of 2 lakh crores in cash reserves, right? In cash reserves. Second, every month, almost 15,000 crores are flowing into the market in forms of SIPs, right? Are flowing into the market in forms of, it can be SIPs, it can be from EPF and even from NPS, right? So this signifies there has been enough liquidity in the market, right? So this signifies enough liquidity in the Indian markets, right? In the Indian markets. So way forward, if you look for Indian market, yes, we may see a little more dip in the market considering the global market scenario. So any position which you are already holding in your portfolio, which is falling into the mid cap or which is falling into the small cap related, right, which has been weak or even touching your stop loss on either on your daily or on your weekly time frame, you respect your stop loss. But if the stop loss is not yet hit do not prematurely exit, right? And if it is a long-term position, keep holding. And this is the best time. As I always say, 96% of the super performance stocks will come out from the bearish market. So watch out or look out for those stocks which are exhibiting strength in this weak market, right? Those stocks which are not falling to the extent of the overall index fall, or those stocks which are in a sideways move or which are flat, or even those stocks which are even picking up strength in a weak market will be the next set of stocks will move once the bull run starts, right? Once the bull run starts. So there has been not any significant news in the Indian market or any changes there which will lead to an immediate crash in the market. Our macroeconomic scenario is decent, is good, and even any correction further or any opportunity, look it as an opportunity to further re-enter into the market, right? Re-enter into the market. Just that don't do any experiments now. As we have discussed about the US India, sorry, of the India VIX volatility index, as the India VIX is above 18 or above 20 for the short term or swing trading related or even preferably intraday trading, avoid for some days, right? Use any correction for accumulating your long-term companies or building your long-term portfolio. But the swing trading, short-term trading, let the dust settle, right? Let the markets consolidate it, right? Let the markets consolidate. And once we see again a strength in the market, then we can again re-enter, right? Then we can again re-enter. Okay, good.